Ladies and gentlemen, good day and welcome to Post-Result Q2 FY26 Earning Conference Call of RailTel Corporation of India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from Antique Stock Broking. Thank you and over to you, sir.
Thanks and warm welcome to all the investors and analysts for the interaction with the management of RailTel Corporation of India Limited. And the team in RailTel in today's call is led by Mr. Sanjay Kumar ji, who is the Chairman and Managing Director, Mr. V. Rama Manohar Rao ji, who is Director Finance, Mr. Manoj Tandon ji, Director Projects Operational Maintenance, and along with Manoj ji is Mr. H.C. Batra ji, who is Special ED Finance. So as usual, we'll have brief from the management on the gone by quarter, and then we'll have lines for a Q&A. Thank you, and over to you, Sanjay sir.
Thank you, Vishalji, and a very good afternoon to all of you. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q2 financial results of FY26, which were declared by the company on 29th October 2025. The company achieved operating revenue of rupees 951 crores in Q2 of FY26 as against rupees 744 crores in Q1 of FY26, registering the Q-on-Q growth of 28%. The telecom segment contributed rupees 367 crores and project segment contributed rupees 584 crores in company's operating income. As regards the total revenue, the Q-on-Q growth is 27% with rupees 966 crores in Q2 FY26 as compared to rupees 758 crores in Q1 of FY26. The profit before tax in Q2 of FY26 is rupees 105 crores against rupees 89 crores in Q1 of FY26, registering a Q-on-Q growth of 18%. The profit after tax in Q2 of FY26 is rupees 76 crores as against rupees 66 crores in Q1 of FY26, registering a Q-on-Q growth of 15%. The company achieved total income of rupees 1,724 crore in H1 of FY25-26 as compared to rupees 1,440 crores during the corresponding period of last year, registering growth of 20%. PAT for the first half of 25-26 was rupees 142 crores as against rupees 121 crores during the corresponding period of the last financial year, with a growth of 17%. I am happy to state that the Board of Directors of the company declared an interim dividend of rupee 1 per share for FY25-26. Earning per share in first half of FY26 stands at rupees 4.43 as against rupees 3.78 of first half of FY25, registering a year-on-year growth of 17%. Earning per share in Q2 of FY26 was 2.37 as against 2.06 of Q1 of FY26, registering a Q-on-Q growth of 15%. The total order book of the company as on date is rupees 8,251 crore. During current financial year, the company received total orders of 3,317 crores up to 30/09/2025, which is higher than total orders received during entire 24-25. and almost 3 times the orders received during H1 of 24-25. Hence, the momentum created during Q4 of last year is continuing in the current year. The company is celebrating silver jubilee of its foundation in the current year, and this is true tribute to our celebrations. I thank you very much for your trust and vision for the future of this company. Jai Hind.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Kumar Divyanshu, who is an individual investor. Please go ahead.
Yeah, hello, audible?
Yes, please. You are audible.
Okay. Yeah, congratulations for the very good set of numbers, sir. Basically, I have 1 or 2 questions. First question regarding the order book status. Could you please comment on that till Q2 FY26? And the second question, like order inflow, whether you are having the order inflow in coming quarters or not. And the third is that, please comment on the data center expansion or capex planning if you are having. Thank you.
Your second question, can you please repeat once again?
Yeah, my second question was regarding the Kavach and in the segment of data center. Could you please comment on that, like if there is any progress or the company is planning to enter into the particular segment business? Likewise, anything is there? Or is there any planning something like from the management onward?
So yes, total order book I already told till end of second quarter. Exactly, I don't remember till the end of second quarter, but today it is 8,251 crore. Today it is 8,251 crore. And as you said, Kavach. So Kavach, we are already doing work. 2 orders we have already won and they are under execution. And there are tenders where we are continuously applying. Whichever tenders are coming, we are, of course, participating in those tenders. On data center front, so one edge data center is already up in Gurgaon and the other one is under progress in Mumbai, and maybe 1 or 2 we may be doing by the end of this year. On other data center progress is that we have already started working on developing 10 megawatt data center. So initially it will be 5 megawatt and then we will upgrade it to 10 megawatt, which is work is already started. Civil work is already started in Noida. Yeah. I hope I have answered your questions.
Yeah. Got it, sir. Thank you so much. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Mohit Mishra from ICICI Securities. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I have a couple of small questions. So out of the order book of 8,251 crores, what percentage is for railways?
So if you ask railways, so railways share would be around, it is about 800 crore is railways. So you can say around 10%.
Around 10%. Okay, sir. And sir, could you give me the breakup of telecom services revenue under NLD?
Oh, sorry, I'll just correct. Railway total will be around 22%. 22%. And another telecom, if you put together telecom also, that will be around 25%.
Okay, sir. Okay. And sir, could you give me the breakup of telecom services revenue, NLD, ISP, and IP for the quarter?
Yeah. So uh, so NLD is around 153 crore, ISP is 111 crore, and IP1 is 29 crore. Total put together is 294 crore. This is core telecom revenue.
Okay, sir. Okay. Also, sir, the guidance that you gave in the last quarter call of 25% revenue growth and 11%-12% margin, would you stick with it, or is there any revision to the guidance
No, there's no
for
revision, so
FY26?
we stick to that.
Okay, sir. Okay, sir. Thank you so much for answering the questions, and all the best for the coming quarters. Thank you.
Thank you.
Thank you. The next question comes from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah, congratulations for the outstanding numbers, sir. My
Thank you.
question is, can you give me the composition of the order book, which you have 8,250 crores, that's what you said, right?
So
I'm sorry
you
to
want,
interrupt you. I'm sorry to interrupt you, Mr. Viraj, but your voice sounds very muffled.
yeah, just can you please repeat?
Can you please speak
Can
to
you
your
please-
handset?
Yeah, is it better?
No,
Yeah.
sir, it's still a little distant.
I think it is better for me. You can.
Okay, sir.
Yeah, sir, can you give me the composition of the order book, which you said, of 8,250 crores would be
Yeah. So roughly, I would say around 3,700 crore is from various states. Around it's 2,500 crore, 25% rather. So it's around 2,000 crore, 2,000 crores is from railways. Then various PSUs is around close to slightly more than 900 crore. Various other government departments is around 750 plus crores. Financial sector is around 350 crores. Other railway PSUs also there. So all put together around another 350 crores. This is how it is distributed.
And sir, how will be the revenue distributed from this order book? Like how is the execution done? Are they long orders or the short cycle orders?
They are mixed orders. They are all mixed orders. So few of them certainly they are capex based, so they will be like taking 1 or 2 years. Few of them maybe another AMC is there, so they will be going 4, 5 years. So that is how they are. But exact timelines and all that, this is slightly complex thing. So roughly you can say that we should expect around 2,000 crores out of this order book getting converted into revenue.
That means every year the 2,000 crores will be converted into revenue or something?
No, I'm talking for first year.
For the first year.
It will be graded over next year, and then certainly first 2 years are more prominent for the current order book. As and when a new order comes, so generally it is 12 to 18 months, 2 years timelines when they are getting executed.
So the major order gets executed in first 2 years and then it goes slowly and then gets reduced. That's
Certainly, yeah. So it is happening like that for previous years also. So new orders are getting added and old orders are getting converted into revenue. Yes. So this is general trend anywhere else, I think. It is.
Yes, sir. And sir, so the net margin will be 12%. That's what you said last time. Will be maintaining this, or will be improvement further because of the orders, more and more orders we are getting into?
See, as I told when I answered last investor's question, that we will maintain around 11 to 12 only.
Okay. And any place we have in this IMC corridor which government is planning to do?
Which one?
IMC corridor, which is government is planning the big corridor, right?
I didn't get you.
There is some
IMC is what?
IMC corridor that's connecting from here to this Gulf states and back.
No, we are not. No. Not with us.
Okay, sir. Thank you, sir, and all the best. Enjoy again, sir.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Akshay Shah from Toro Wealth Managers. Please go ahead.
Thank you for the opportunity and congratulations for good set of numbers. I am new to the business. So I just want to understand that.
I'm sorry to interrupt you, Akshay sir, but your voice is echoing.
Hello. Is it clear?
No, sir, it's now distant. We can't hear you. Please speak through a handset.
Hello.
Yes, sir, you're audible.
Yeah, speak.
Yes. Sir, congratulations for good set of numbers. Sir, I'm new to the business, so I just want to understand that the 11 to 12% margin that we are talking about, it's PAT margin. And another thing that given our strong order book, are we ramping up our execution and can we see the more growth ahead?
So number one, it is not PAT margin. It is EBIT margin.
Oh.
It is not PAT. It is EBIT, right?
Okay.
So your next question is regarding?
Sir, given our strong order book, are we ramping up our execution and can we see more growth going forward?
See, we are certainly venturing into new sectors, participating into more tenders. We are even now going abroad for new business opportunities, international business. Also, we are trying very hard. So certainly, we are gaining momentum and we are sure that we will succeed.
Okay. And sir, what is the reason for you are maintaining the decrease in the EBITDA margin? So are these a cost pressure or are we going in different businesses, so there is the margin is different? Can you help me understand that?
See, we have mix of two business sectors. One is telecom sector, the other is project business. So project business, I've been consistently maintaining that we will be somewhere around 4 to 5%. And depending upon the revenue mix, the overall margin will fall in and around 11%. So telecom business gives certainly much healthier margin, whereas project is always competitive. You have to execute work and all that. So their margins are even 4 to 5% is considered a good margin in project business. We are trying to remain in that window.
Okay. Thank you so much for answering my question and all the best for futures.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Mohit Mishra from ICICI Securities. Please go ahead.
Thank you for the follow-up. Sir, I missed one question. Could you help me with the CapEx number for the quarter and the estimated CapEx for second half of the year?
So I think if you are talking about CapEx, around 250 crore will be completing.
162 in quarter 2. We have already booked 62.
Yeah, 62 crore we have already booked. So
quarter 2.
Quarter 2. So we will be maintaining 250 around numbers.
215 for the second half.
250 crore, 250.
250. Okay.
for entire financial year, for whole financial
Okay.
year.
Okay, sir. And 62 crore for in Q2.
Yeah.
Okay, sir. Thank you so much.
Thank you. The next question comes from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, good afternoon. Am I audible?
Yeah. Please.
Hello. Yeah, so
Yeah, please.
the first half, we surpassed our entire FY25 with order inflow, which is a great feat. So how do you see the second half panning out? Do we expect a similar order inflow happening close to around 3,000 crores in the second half of FY26 as well?
The expectations should always be on optimistic side. So we always expect we get good orders, higher number of orders. But there are so many factors. We are participating in tenders. We are winning. So sometimes it happens that we get some very good large value order also. So this year, in this quarter, we have got 2 such orders. That is the reason, and we are continuously increasing our intensity of participating in bids. So certainly we expect that this momentum should continue.
Okay. A follow-up on that. So the 2 large orders that we got, could you
Sorry to
quantify the
interrupt
price?
you, Ms. Maitri. Ms. Maitri, can you please speak little away from the mic? Your voice is getting muffled.
Yeah, sure. Is this better?
Yes, it's better. Thank you.
Yeah. The 2 large orders that we kind of won in the second quarter, what sort of what was the amount for those? If I could get that per order.
I think, yeah. So one we got from Bihar state government for setting up the labs for schools, which is 822 crores. So that is one big order which we got this year, I think biggest ever. Another one, I think that was the Kavach order which we got last quarter from East Central Railway. And others are similar. So this is really big, 822 crore, and we want to create it as a model project delivery, which becomes a model for any government project we are doing.
That is great. Also, on the global plans, as you said that you're looking for opportunities abroad. So any tenders in pipeline do we have? And could you quantify how much have you bid for?
There are few opportunities, but since those opportunities are not finalized, so we can't divulge. But yes, we are working on couple of good opportunities, though not of much bigger size, but to begin with, they are good numbers. We will certainly disclose when time. So these are African countries and Caribbean countries.
Africa and Middle East, okay. And do we get
not Middle East, Caribbean, not Middle East.
Okay.
It is not Middle East. Yeah.
Okay, African Caribbean. And the pipeline, can we give a number on what is the pipeline and what sort of win ratio do we have?
You're talking of overall numbers?
Yes, the orders we bid for and what sort of
roughly
win ratio do we have?
our winning factor is around 20%.
And the bidding pipeline?
Bidding pipeline, exactly, I may have to. It keeps going. So every day people are calling. This is not us. It's a number. Every day people are bidding or finding new tenders. So I exactly don't have that number anyway.
Any ballpark figure you could give on it?
So you can just estimate that 3,000 crore we won in last 2 quarters. So certainly we must have bid for around 5 times 15,000 crore roughly in 2 quarters. But this is nothing because many tenders would have been bidded even last year also sometimes. So it is just a number which I got and gave it to you by just averaging. Yeah. Okay.
Yeah, got it. And also with such a big pipeline of orders that we already have won, do we expect FY27 to be on a much higher growth trajectory? Like, are we targeting a 30-35% growth for FY27?
It's too premature to say anything about 27, but yes, certainly, conservatively, we will pursue no less than 20-25% of growth. See, global scenario, global supply chains, those all the uncertain factors might affect things anytime, but I'm sure that with this kind of winning spree which we are going, we should be able to maintain at least 20-25% of growth.
Okay. Yeah, that is it from my side. Thank you and all the best.
Thank you.
Thank you. The next question comes from the line of Nayan Thaker from Investec. Please go ahead.
Hi. Thank you for the opportunity. I had two questions. Sir, I've noted that telecom EBIT on a segmental basis has seen an improvement in margins in the current quarter. If you could help us with what exactly can be the sustainable level of margins in the telecom services segment? That is the first question. And the second question, sir, I have is if you could just guide us to the broad revenue mix between the two segments for the year, between telecom services and project services. Thank you.
Okay. So first I will answer your second question. 39 and 61, that is the ratio between telecom and project business. Right? Second question about this, you are asking margins in telecom in this quarter. So the number being very small, so certainly our margin is going to remain in 35% only. This is one of, even because number is small and quarter is also a small period, but the margin is going to remain in 35% overall, over a long period.
Sir, just a follow-up. On the telecom services, I guess in quarter one, the EBIT was 20.5 and in quarter two it was 27.9. So sorry, 30-35%. Are you saying we should expect an increase going forward?
I'm talking of EBITDA. If you're talking of EBIT, you are right. I'm talking of EBITDA. So the numbers are different we are talking about.
Understood, sir. Understood. Got it. And just a follow-up on the revenue share number you mentioned. So will we see a further reduction in the telecom revenue share in going forward in 27 and 28, or can we maintain a broad 40-60? If you could just provide some guidance on that.
Broadly for some time to come, 40-60, more or less. We have started, as I've been saying, that we are trying to get more telecom business, though competition is very tough and price pressures are very high. But we have started getting some successes. So despite project business going at much higher pace, with some more revenue growth coming in from telecom sector, we should maintain 40-60. In and around 40.
Understood, sir. And sorry, sir, if I can just squeeze in one question. If we talk of the segmental results of the telecom services on an EBIT level, if you could just provide some color on that margin, please, on a sustainable basis. While you did mention on an EBITDA level, but if you could just help me with the same on the EBIT level.
Same, 21-22%.
Understood. Okay, sir. Thank you very much and all the best for the next remaining quarters.
Thank you.
Thank you. The next question comes from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah, thank you for the follow-up, sir. This composition of the order book, the 40% is telecom and the rest is project. Is that the correct way to think?
You are talking about order book. I am talking about revenue. I think your question is about order book.
Yeah, what composition will be project and the telecom in the order book?
Order book, I think this question I might not be having answer immediately because many project business, they have both mix. So I might have to really segregate the
Rough figure
certainly
would also
order
help,
book,
sir.
but certainly project business order book is higher. Telecom new order book would be around 13 to 14% new order book.
Okay. And sir, my next question is, can you give a color on this data center business? Like, what sort of revenue you will get from this data center?
I would like to clarify generally. So telecom order book is generally yearly, whereas project is spread over many years, 3, 4, 5 years. So actually it's very difficult to make it out that what is the actual impact on yearly revenue. Sorry, just wanted to make it more clear to the investor. And now please tell your next question.
Color on the data center business, like how is the revenue plan? What will be the margins for what is the future potential for data center business? Give some color on that.
Data center business is doing very good. In fact, we had recently, few months back, we had signed an MOU with TCS, and we are using their sovereign data center platform also for providing services to government. And soon we will be using their platform also. We are coming up with our own data center in Noida, which is investors, basically PPP model. Work has already started. It will take around maybe another 1.5. We really have a very good growth opportunity, and we are eagerly waiting to basically make a strong foothold in this sector, because there is a lot of growth opportunity. Data center, you've been reading in newspapers also.
Right, sir. And what percentage of the revenue comes right now, sir, in data center business would be?
Right now, it would be 150 crores kind of numbers in annual. Last year, it was 127 crores. Out of 3,500. So, it is not a very big number, but yes, it will grow.
Okay. And what percentage? It will be like what, 30-40% growth year to year, like that? Or maybe more?
We must expect 30 to 40%.
Okay. Thank you.
Thank you.
Thank you. The next question comes from the line of Shubham Shelar from Antique Stock Broking. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yes.
So only one question, sir, regarding exceptional item during the quarter of around rupees 16 crores. Does it come under ECL provision?
Yes. This is ECL only.
Thank you.
Your voice is not clear. Anyway, you wanted to say something else?
No, sir. That's it.
Okay.
Thank you. Next up, we have Mr. Vishal Periwal from Antique Stock Broking. Please go ahead. Mr. Vishal?
Yes, sir. Can you hear me now?
No, sir, your voice is not audible. Hello?
Yeah, can you hear me now? Is this better?
So your
Slightly
voice
better,
still
but
sounds, yes, your voice still sounds a little muffled.
Okay, I think I'll come back. I think this will be better, right?
Yes, sir, it's better.
Yeah.
Can I go? Yeah, sorry, sir. Sir, one is in terms of our
So you are
one is
again
in terms
in
of
order.
our order book. Yeah, sorry.
Yeah.
One is in terms of order book. is it fair to say largely, it's state government, central government and departments, we don't have any major private sector contribution as of now?
You are right. Not major private sector.
Got it. And then, in terms of data centers, whatever we have currently, what could be utilization rate right now?
If you ask our data centers, which is very small capacity, so we are nearly 60 to 70% already utilized. That is why we are tying up with other and developing new data centers.
Okay. Got it. And then, sir, you have also given the breakup of this telecom revenue breakup in the quarterly. But in terms of total to almost like 293, 294 crores. But what we have reported in segmental is a higher number. So what could be the difference here?
Actually, it includes ICT revenue also, which includes other than non-telecom, basically not pure telecom. So there are two, there are licensed income, NLD, ISP and IP1. And there are, in our telecoms income segment, there is data center segment is also included.
Okay. So
that is why you see that.
Yeah. Okay.
Yeah.
Got it. But so earlier we were booking everything in telecom. Is it fair to say?
No, even now, data center is not a separate segment.
Okay. So it's part of IP1.
No. IP1 is separate, and now we call it ICT revenue.
ICT. Okay. Got it. And similarly, sir, can you give revenue breakup for project side also, the project services?
Project mein, if you talk so railway and non-railway. So then
Yes,
134 crore from railways and 449 from other than railway.
Okay. Got it. And maybe one last thing, it could be a repetition only, I think, though you have answered. But in terms of, if one has to understand, we are getting pretty good order inflow. If one has to take a understanding, like, any particular sector, anything that is driving it, can we put it in as some sort of bucket that will help us, to keep a gauge and, that will be helpful.
Actually, so we are working in digitalization initiatives. Most of our SI projects, system integration projects, belong to digitalization initiatives of various departments, irrespective of any particular sector, be it health, be it education, be it mining, be it any other. So generally, it is not concentrated in one. But yeah, recent orders which you see in these 2 quarters, it is education sector.
Okay. Right. And then maybe one last thing. Though you have mentioned, private sector order book contribution is negligible as of now. But it is fair to say, whatever orders that we have, they are all on competitive bidding, where private, public, all players, including us, we compete. That's fair to. There's no nomination concept, right?
So competitive, if you say, so roughly around 70-75% of our orders are competitive. Few are for nomination. Yes.
Got it, sir. And nomination will be largely focused in the railway side.
No, there are other than railways also. It is not necessarily railway only.
Okay. I think sure, sir. I think that's helpful. I'll come back in the queue, sir. Thank you.
Okay.
As there are no further questions, with this, we would now conclude the call. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.